Well, Ravinder Rana here. Let us discuss gift of an insurance policy. Gift of an insurance policy. The SBI General Insurance, one of the leading general insurance companies in India, announced the launch of first of its kind offering Shagun, gift and insurance, a unique gift of personal action policy. This product was filed by SBI General under Insurance Regulatory and Development Authority of India sandbox regulations. So the key differentiating features of the policy is that it can be gifted to anyone you want, which means it is not necessary for the policy buyer to be related to the insured. So Shagun covers personal accident insurance, which provides complete financial protection to the insured person against uncertainties such as accidental death and partial or total disabilities and permanent as well as temporary disabilities resulting from an accident. So on the launch of the product, SBI said Shagun is a unique offering of SBI. In Indian culture, we often celebrate our milestones of auspicious occasions by gifting either something or an envelope of money. So this gesture is synonymous with well wishes and good luck. So Shagun is a valued gift of security to be positioned for such kind of gestures. The premium of the product has also been designed at rupees 501, 1001, 2001. Thus, not just the name Shagun, but also the premium amount has a touch of our Indian tradition. Key features of the policy includes a gift cover can gift this Shagun to family, friends, extended family, and even domestic helpers, chauffeurs, drivers, cook, etc. Gift receiver can be in the age group of 18 years to 65 years. Policy can be availed for up to 1 year. So the policy covers the following subject to the terms and conditions, that is accidental death. The sum insured is paid out to the nominee in case of accidental death of the insured person. Permanent total disablement, if accidental bodily injury causes permanent total disablement, then a percentage of sum insured is paid to the insured person. Additionally, the coverage also include educational benefits, that is 1% of the sum insured of rupees 50,000, whichever is lower. It paid towards education benefit of up to maximum 2 children. Adaptation allowance, 1% of the sum insured of rupees 25,000, whichever is lower, is paid towards cost of modifying house or vehicles, and then permanent partial disability. If accidental body injury causes permanent partial disablement, then sum insured percentage is paid. Ambulance cover, that is 10% of the sum insured, subject to maximum of rupees 1 lakh will be paid towards expenses incurred for availing an ambulance service, including air ambulance to transfer the insured. So, the blind date you had gifted your friend on birthday had not turned out the way you had anticipated. So if you are relentlessly rejected one gift after another, browsing through Amazon's Lenskart, Fans and Peters, a small add-on one of the screen catches your eye. Gift your friend an insurance policy. Now it is different and grown up. You think to yourself as you click on the link. Novel as it sounds, the gift of the insurance product is not just some idea borrowed from the West in 2020. The Insurance Regulatory and Development Authority of India approved two gift insurance products under its sandbox guidelines. Guidelines that allow insurers to live test products on a pilot basis for a limited period. The first one is Insurance Gift Card by Reliance General Insurance. In September 2020, Reliance General Insurance launched an insurance gift card to buy health insurance policies. The gift card worked like an e-voucher and could be redeemed by purchasing health insurance policies from the Reliance General Insurance websites. Then Shagun, Gift and Insurance by SBI General Insurance. So SBI General Insurance launched Shagun, that is Gift and Insurance, in September 2020, a personal accident policy that could be gifted to anyone, true to its name. So the denominations of premium were set at rupees 501, 1001, 2001. The policy provided for losses arising due to accidental death and disability. The traditional method of gifting insurance is through assignment. An assignment transfers the legal ownership of a policy to the assignee. The catch, however, is that an assignee should be related to the policyholder by blood or marriage. And that is the gap insurance as a gift address. So given the low penetration density in the country, insurers are warming up to the idea of insurance as a gift. Future Generali recently launched their gift of health product. The product is being offered in two variants at the moment, but Future Generali is bullish on its uptake. Here is a list of telltale signs that the product category is here to stay. Increased awareness. New and exciting product categories attract top advertising and marketing brains. These agencies in turn help in improving visibility for the products, thereby increasing awareness. Then increase in insured population means increased awareness translates into increased footfalls. So the insurance penetration in the country stands at around 4% as of 2021. If there is one industry that has waited for its turn to explode, it is insurance. It's a matter of time that a savvy advertiser realizes the potential of pitching an insurance gift voucher to a customer on Diwali as opposed to a dairy milk, or compulsion of use. When was the last time a friend gifted you an Amazon voucher that could buy you anything and everything but from Amazon? So extrapolate it to insurance. Elder folk who tend to understand the concept of risk and health insurance could gift their daughters and nieces and a health voucher. So when you know you cannot buy anything else from the voucher, you are bound to study and buy the appropriate product for your health needs. So a gift of insurance transcends other gifts from the perspective that it couples thoughtfulness with the understanding of risk and can be of help to a loved one in their times of need. So the gifting industry in India is growing at a CAGR of around 17%. Imagine the impact on insurance penetration and density when insurers design product to ride this wave. A gift of insurance Diwali voucher for the mate could go viral as early as this year. So the possibility seems endless. But if you are giving a personal accident policy, then you have to think again. Because the standard personal accident insurance of Saral Suraksha Bima offers 3 mandatory base covers and 3 optional covers which can be chosen by the policyholder based on the requirement. The policy is offered for a tenure of 1 year. The Insurance Regulatory and Development Authority of India has directed all health insurers to mandatorily offer a standard personal accident insurance policy by April 1. So in this piece, see a few features of the personal accident policy. The minimum entry age is 18 years and the maximum age at entry is 70 years. Dependent children are covered from the age 3 months to 25 years. The policy can be availed by a family on an individual basis, which means that the chosen sum insured will apply to each family member separately. You will get the minimum sum insured of 2.5 lakh and a maximum of rupees 1 crore. You can choose any sum insured within these limits in the multiples of 50,000. The policy has 3 mandatory base covers. These are death, permanent total disablement and permanent partial disablement. So the policy also has 3 optional covers which can be chosen by the policyholder based on the requirement. These covers are temporary total disablement, hospitalization expenses due to accident and education grant. Then 100% sum insured benefit is payable on the death of the insured person due to an injury sustained in an accident during the policy period, provided that the insured person's death occurs within a year from the date of the accident. So the benefit applicable to the permanent partial disablement cover ranges from 1% to 50% of the sum insured payable to the insured. Loss of one entire hand, one entire foot, the sight of one eye or both ears accounts for 50% sum insured payable, while the loss of 4 fingers and thumb of one hand or only 4 fingers accounts for 40% and 35% sum insured payable respectively. In the case of optional cover educational grant, if the insured person meets death or permanent total disability due to accident, a one-time educational grant of 10% of the base sum insured per child is payable to all dependent children of the insured. If the dependent children are pursuing an educational course as a full-time student in an educational institution, or the age of the child is not more than 25 completed years. So in the case of optional cover, hospitalization expenses due to accident, the hospitalization expenses arising due to accident shall be payable under the cover up to the limit of 10% of the base sum insured. Expenses related to hospitalization, including the cost of prosthetic and other devices or equipment if implanted internally during a surgical procedure, are covered under this option or optional cover. So further expenses related to dental treatment, plastic surgery and all daycare treatments necessitated due to injury are covered under the policy. In the case of optional cover, temporary total disablement, the cover compensates the insured person at the rate of 0.2% of the base sum insured per week. If the insured person is completely incapacitated from engaging in any employment or occupation due to accident, the minimum period of the disablement shall be 4 weeks for the benefit to be payable under this cover. So after completion of a minimum of 4 weeks, the policyholder is entitled to the benefit from the date of temporary disablement. Cumulative bonus, which means any increase or addition in the sum insured granted by the insurer without an associated increase in premium, is applicable only in respect of base cover. Because sum insured excluding cumulative bonus will get increased by 5% of sum insured in respect of each claim-free policy year, subject to a maximum of 50% of the sum insured, provided the policy is renewed without a break. If a claim is made in any particular year, the cumulative bonus accrued will be reduced at the same rate at which it has accrued. You can pay premium on a yearly, half-yearly, quarterly and monthly basis. However, you must know that for yearly payment of mode, a fixed period of 30 years is allowed as a grace period, and for All other modes of payment, a fixed premium of 15 days is allowed. So insurance policy is a best gift one can give, but the options are very limited, because the life insurance policy can be taken in the name of children or wife or whoever is having the insurable interest in one's life. The another method is nomination. By nomination also the benefits can be transferred to the nominee. But the question is, when you buy an insurance policy, the insured has to be either you or someone related to you. But after the launch of SBI General Insurance Sagun Gift and Insurance, it is not necessary for the policy buyer to be related to the insured. It is a unique personal accident policy approved by the insurance regulator. The key differentiating feature of the policy is that it can be gifted to anyone you want, which means it is not necessary for the policy buyer to be related to the insured. Thank you very much.